A very good morning. I speak to Doctor. Today we are going to present about our group assignment for Foundation of Financial Management. Let me introduce our group member. Brian Jing, Chin Jarong, Edris Yong, Liu Chi-hyun, Muhammad Ajru.
Hi, I am Liu Chi-hyun and I will be talking about the organizational context for our project. Both our companies are part of automobile industry. Our first company is MBM Resources. They have 20% interest in Perdua. And portfolio also includes Volkswagen, Volvo, and Hino. Our second company is Besmas Auto Berhad. They are the major retailer and distributor of Mazda and Peugeot as well as Kia, both very big companies in Malaysia. MBM Resources has 31 outlets all around Malaysia, with half of them being Perdua under the company DMM Sales. Meanwhile, Besmas Auto stated that they have 150 outlets all around Malaysia.
Morning, Doctor. My name is Chin Jarong. I'm going to talk about liquidity between Besmas Auto Berhad and MBRB Berhad. For the current ratio from year 2020 to year 2022, MBM Resources Berhad liquidity was higher than the Besmas Auto. For the acid test ratio from year 2020 to year 2022, Besmas Auto Berhad is less liquidity compared to MBRB Resource. For the day in inventory from year 2020 to 2022, Besmas Auto Berhad carry inventory for longer time compared to MBRB Berhad. For inventory turnover from year 2020 to year 2022, Besmas Auto used or sold their inventory and replaced them at the lower rate compared to MBM Resource Berhad. For the day in receivable from year 2020 to year 2022, Besmas Auto used shorter time to collect account receivable compared to MBM Resource Berhad. For the account receivable turnover from year 2020 to year 2022, Besmas Auto collect its average account receivable in faster than MBRB Resource Berhad.
Good morning, Doctor and my fellow coursemate. My name is Brian. Today, I would like to talk about the manager generating and educate operating fit on the organization assets in Besmas Auto Berhad and also MBM Resource Berhad. For the operating return on assets from year 2020 to 2022, Besmas Auto Berhad was better at utilizing its asset to generate profits compared to MBM Resource Berhad. For the operating profit margin from year 2020 to 2022, the managers of MBM Resource Berhad were better than Besmas Auto Berhad in managing the cost of goods sold and operating expenses. For the total assets turnover from year 2020 to 2022, the total assets turnover for MBM Resource Berhad was lower than Besmas Auto Berhad. For fixed asset turnover from year 2020 to 2022, the fixed asset turnover of MBM Resource Berhad was lower than Besmas Auto Berhad. Of course of that, these two organizations financing is asset also. For the debt ratio from year 2020 to 2022, debt ratio for Besmas Auto Berhad based its assets was over higher than MBM Resource Berhad. For time interest funds from year 2020 to 2022, MBM Resource Berhad operating income was higher than Besmas Auto Berhad.
The manager generating a good return on equity (ROE). From year 2020 to 2022, owners of MBM Resources Berhad were receiving a lower return compared to Besmas Auto Berhad. A lower return on the firm's asset will always result in a lower return on equity and vice versa. Higher debt translates to higher ROE under favorable business conditions.
Moving on, I'll be talking about the projections and recommendations for both companies. But before we start with that, I would like to wish a good day to everyone that's watching the video. So, let's begin with future performance forecasts. MBM Berhad has managed to have consistently higher liquidity in both current ratio and acid tests. Besmas Auto Berhad, on the other hand, was growing steadily in its liquidity but still has lower liquidity than MMR. What this shows us is that MMR is better positioned to meet short-term obligations and is likely to maintain this in the coming years, with Besmas steadily increasing its liquidity over time. MMR also shows consistency with slow days of sales and inventory turnover. For Besmas Auto, it managed to decrease its average time to sell its inventory in 3 years' time. It is clear to us that Besmas Auto will keep improving its inventory management while MMR will remain to be more efficient in turning over inventory. Then, Burma's Auto consistently outperforms MBMR in terms of operating return on assets, while MBMR exhibits high operating profit margins that were consistently increasing each year. Burma's Auto was also doing much better with its fixed assets turnover and total assets turnover, which were a lot higher than MBMR this year. Overall, we expect Burma's Auto to continue generating higher operating profit and sales per unit of assets, while MMR might focus more on improving its operating profit margins. MMR also consistently maintains a higher equity financing ratio compared to Burma's Auto. Both companies demonstrate strong times interest earn ratios, indicating sufficient operating income to cover interest expenses, lower debt ratios, and high time interest earn ratios suggest low financial risk for both companies. As for return on equity, it is our estimate that Burma's Auto will continue having a higher ROE than MBMR due to its efficient asset utilizations and a moderate level of debt. As for which companies to invest in, if you were investors with 100k, let's say, then we made the decision that Burma's Auto would be a better company to invest in. As for the reasons why, first, Burma's Auto has consistently generated a much higher ROE with an increasing rate each year compared to MMR, making it an attractive option to invest in. As we know, companies with higher ROE tend to have higher price per earnings and vice versa. When this doesn't happen, and by that I mean when a company has high ROE but low price per earnings, let's say, that means that the company is undervalued. On the other hand, when a company has low ROE but higher price per earnings, it means that the company is overvalued. However, based on our computation, we know that the values of both Burma's Auto Berhad and also MBMR are fair because both their ROE and their price per earnings are correlating with each other. So yes, Burma's would still be a better choice to invest in because of its profitability, even if MBMR is cheaper. Based on the liquidity test that we have done, MBMR Berhad is more than capable and certainly better than Burma's Auto when it comes to meeting its short-term obligations, its assets. But one thing to keep in mind is that Burma's Auto has been increasing its liquidity over the years, and if this continues, if the trend continues, then their liquidity will keep on increasing, so there's that. Then, Burma's Auto Berhad has a higher ratio of debt to equity, which brings more risk, as it shows that it's financing its growth with debt more compared to MBMR Berhad. But again, one thing to keep in mind is that Burma's Auto might be doing this as a calculated move, trying to boost its growth with more debt to finance the growth. To conclude, we believe that Burma's Auto Berhad would be the best company to invest in between the two, as it had better return on equity ratios and its price per earning ratios were neither undervalued nor overvalued, with the latter being especially important. While MBMR has higher liquidity than Burma's Auto Berhad, Burma's liquidity was also consistently increasing each year. There's also the fact that Burma's Auto had a better profit operating margin than MMR, which tells us that Burma's Auto is much more efficient than MMR when it comes to converting its revenue into profits and managing expenses as well. That's the reason why we believe that Burma's Auto would be a better company to invest in. And yep, that's that from us. Thank you so much.